remember this whole fiasco that happened earlier this year? Bank stocks, right? It started out with Silicon Bank, and then we were all told that oh, the sky is falling. These banks are going to go belly up, and then we get through that, and then lo and behold, May 17th, small bank CEOs are buying up their stock. Now we're starting to see these bank stocks perform really well. So I'm seeing a really clear pattern with all of this, that essentially we have to do the opposite of what we're told. I really believe that. Like, remember if during COVID we were told, oh no, the chip makers, right? That there's not going to be enough chips to put in all of our cars and phones and computers, and Nvidia stock got just hammered. It went down to like $178 a share. Now it's back up to over $400 a share. It's just interesting, right? What do you all think? Tell me in the comment section. Here's a video. Have a listen.
Joins us now. Tom, always good to have you. A lot of concern about the regionals, whether it's exposure to commercial office space loans, whether it's their ability to actually get a net interest margin given what they're paying to keep deposits. What's your take after we've gotten these earnings? Are things perhaps better than had been anticipated?
I think the worst case situation has not been playing out. And look, the group as of this morning was trading at 47 and 49% of market multiples. Just a couple of weeks ago, it was at an all-time low. There's a tremendous amount of bad news already in the stocks. I mean, look at Western Alliance. It was up 25% last week after reporting earnings. It just tells you how cautious the market's been about the banks, and really, frankly, how heavy the hangover was from the bank failures back in March. Back in March, we said that the problems at those banks were very idiosyncratic to them. What we're learning now is that that was the case. The rest of the industry is pretty stable. It's an earnings question, not a viability question. And I think we're getting that reset right now. So the news, while there still are headwinds to earnings, we left 75% of the estimates for the banks that have already reported unchanged. And we actually raised estimates for the biggest banks that reported during the first week of bank earnings.
Right. Before we get to the biggest banks, so just to focus again on these regionals and given that rally, there is this concern about their earnings power over time.
Yeah.
And especially in terms of generating a real net interest income or margin. I mean, are you still concerned about that? Does that still loom large, that loss of deposits that took such a short amount of time for some of these banks?
So two things. One is when you take our models, and we follow over 200 companies, so actually you're right. Only 38% of the 215 banks we followed had already reported, but it was mostly the big banks. So this week, it's the regional banks that are reporting. We think that this current environment is going to take return on equity down 200 basis points. So maybe instead of earning 14 or 15 on equity, they earn 12 or 13 until we reset. Our opinion is that's not a crisis. That's just a little bit lower profitability. So that's the big point. Then the question, like I said earlier, is what is priced in. But I want to give you one other important point, because the buzz coming off of the conference calls last week is that things got better during the quarter. The remixing of deposits was less punishable at the end of the quarter than it was at the beginning. And I think